Hey, hello traders. Welcome back to the channel on a Sunday sunny morning. Yesterday in the budget, our finance minister has done some changes in the income tax slabs, probably to boost consumption in our country. But we as traders, we don't deep dive into the policies, what government makes. For us, whatever lies is in the charts. So let's start the video. And I'll today be sharing about the daily, weekly, and the monthly time frame charts because we can see some interesting developments in the all three time frames or various sectors. So first, I'll start with the monthly time frame chart of Nifty Spot. So first thing over here, what we can see is the last month was pretty bearish, considering that we made a low of close to almost 22,800 thereabouts. But thankfully, when the pullback did occur in the last few trading sessions, we have been able to close marginally negative. And this is a high wave candle. And we can see straight away 1, 2, 3, 4, 4 months of negative close. So far, so good. High wave candles generally at support are probably good. But is it going to be a real big bottom or not? I think time will tell. Now going ahead with the weekly time frame chart, what we can see that this bounce has come on the back of these two candles, which I've been consistently sharing in many of my videos. This is the first, this is the second high. Okay. So these two candles coming together did boost a big bounce back in the Nifty spot, which is a good sign. Now, along with this bounce back, if we can see these two candles, they are forming a candle pattern which is called bullish engulfing pattern, which is again a positive sign. Okay. So far we saw one high wave candle. We saw a bullish engulfing pattern in the weekly time frame chart. So far so good. Going ahead, let's have a look at the shorter term time frame chart, which is the daily time frame chart. In the daily time frame chart, how much did we bounce back? Let us have a look. See, so we have been able to bounce back close to 3.71% in a matter of almost 5 trading sessions, which is not at all bad. Now, yesterday, obviously, since it was a budget day, there was some sort of volatility which was expected. And the previous day, we closed somewhere close to 23,497. And from there, we did inch closer towards 23,700. But we did made an intraday high of 23,639, 640. Now, what we can understand over here is that the momentum is on the upside. We can see because the RSI has been able to provide a trend line breakout. The RSI is hinting some momentum on the upside. Trend is certainly flat because we are trading in between these two moving averages. So the trend is flat and this is a bounce back, nothing more than that. Now, if we want to go slightly higher, suppose if we want to start a bull rally, something like this, which is really amazing, then we'll have to first of all understand that again, we are coming near important resistance, small resistance, not a very strong one, but a small resistance zone, which is a candlestick cluster. But this candlestick cluster is accompanied with a trend line, which has been holding since few months. You can see this is the first high, second, third, and probably we may test a third time. So this level is close to, I'll just share the level with you. This level is close to, I think, 23,830, 23,800. So as soon as we go above 23,700, we'll start seeing some sort of resistance developing in the Nifty spot. Now, again, my point was, if we want to see any sort of bullishness, we'll have to first of all close above this trend line and even sustain above this. Why? The very easy answer for this is, in a Dow theory, we are making consistent lower highs and lower lows. So you can see all these lower highs and lower lows. So the first sign that something is happening good is probably crossing this high, closing above this, and not just one day close and then going down, but probably sustained rally. Okay. So as of now, yes, it is good. We have been able to pull back pretty impressive 3.71% from the recent lows. And so far, so good. The momentum is high. The trend is flat. But this is a mere pullback. So do not get extremely enthusiastic about this rally. Let's wait and watch, and probably in the next few days, price will tell on its own that is it ready to go higher, or probably something else lies ahead. Now, going to Bank Nifty, if you have a look at the Bank Nifty chart, it looks a little bit different than the chart which is Nifty. It's a little bit different. Yes, we have been able to pull back, and there is a bullish engulfing pattern even in this weekly time frame chart, which is the Bank Nifty, but it is not very, very impressive as it was in the Nifty. Now, going ahead in the daily time frame chart, if you can see, I had clearly mentioned in my previous video also that this particular band will provide a resistance for the Bank Nifty, which was 49,774 to 49,676. And if you can see that Bank Nifty yesterday was able to trade above it, but it did not manage to close. So this resistance worked pretty perfectly. And if it wants to go higher, again, I would say that this is the resistance which I just shared. And the second one is yesterday's high. If we sustain above it, then slowly we could, see levels like 50,120 or maybe higher than that. If this level is surpassed, probably, and if you want to know that what are the next levels of resistance, probably it is a little bit higher. We'll come to that levels a little bit later in the next few videos, because as of now, there is no evidence that Bank Nifty is ready to go higher, because even yesterday after a good news, we just have a high wave candle over here. So let's wait and watch out what happens in the next few days. PSU Banks. Now, talking about PSU Banks, if you just have random look, if you just have a random look in the monthly time frame chart in the PSU Banks, one thing is pretty much evident, that this is a fast correction. This is not something like, you can say, a zigzag sort of stuff. Now, what is zigzag? In zigzag stuff, something like this happens, up and down sort of stuff. That is not happening. This is a pretty high momentum correction happening in the PSU Banks. And if you have a look at the weekly time frame chart also, there is one sort of hammer, but immediately after the hammer, we have a sort of inverted hammer, once again an inverted hammer. So there is consistent selling pressure which is evident on the higher level. Now, in case if the PSU Banks want to go higher, the first level of resistance which will be needed to surpass by the PSU Banking Index will be 6478 to 6498. This is the first resistance. So once this resistance is surpassed, we'll open the gates to the next one, which is close to 6703 to 6723. But so far, if you see properly, there are not a lot of evidences visible on the chart that the PSU banking stocks are looking very, very impressive, and a lot will depend obviously on the leader of the index, this PSU banking index, which is SBI. And SBI currently is poised at a very strong resistance zone. You can see this particular thing. This is the first resistance over here. This is the second one, and probably this is the smaller resistance third. This is the fourth. So SBI is actually at a very strong resistance zone. Surpassing this will not be easy. So I think in next few days, we'll be able to figure out that what is going to happen in the PSU banking charts. And just to make few things clear, if you can see two different candles with the same shape, it is because some error in trading view, because yesterday was a budget. I'm pretty sure that by tomorrow's close, all these errors will be rectified. All right. Going ahead in the private banking pack, again, let's have a look at the weekly and the monthly time frame chart. In the weekly time frame chart, I can say that momentum is pretty high on the downside, but I can also say that it is not as faster correction as it was in the PSU banking pack. Now, again, we have a bullish engulfing pattern over here, which is looking a little bit more impressive than the PSU banking chart. in the daily time frame chart, we have been able to pull back pretty impressively with close to, I can say, 4.76% rally in the matter of 6 trading sessions. This is not at all bad. This is really good. And we are also trading near an important resistance. You can see this is the first one. This small is the second resistance, and now we have tested the third time. So yes, we are near a strong resistance zone, and I guess a lot will depend on this particular stock, which is HDFC Bank. Now, you can see that the first fall over here in the HDFC Bank was pretty fast. Then it rallied, it gave a pullback, it again came down. We had a positive divergence sort of in RSI, and then we again have a pullback. And if you remember a few days back, if you're a continuous viewer of my channel, somewhere over here I had clearly mentioned that HDFC Bank will probably consolidate for next few trading sessions, and that is what has happened. It corrected, went up, and now it is a little bit sideways in last 2 trading sessions. So as of now, it is just consolidating. What happens over here will be important, will be extremely important. So keep open eye, be very, very vigilant on the HDFC banking stock. Energy pack. Now, energy pack is into a completely different league. Let's have a look first at the monthly time frame chart. In the monthly time frame chart, this is an extremely high momentum correction which has happened in the last few months. The sector has corrected, and currently it has traded just below its 50% retracement, which marked the lows from 1st Feb 2023 to the recent high in 2024 mid. So we have retraced more than 50%, and we have a hammer over here. And looking at the weekly time frame chart, again the RSI is not exactly at 30, just above 30. But one thing is surprising, that after such a strong correction, RSI is not ready to go below 30. Now this is, I should not say that this is a sign of extreme strength or something, but it certainly speaks a lot that RSI is extremely rigid, that it does not want to go below 30. And the reason why is the momentum on the downside, the velocity with which the price was falling on the downside has reduced. Now, is it a good sign for the bulls, or is it a good sign for the bears? This is certainly a good sign for the bulls, and you can see a little bit in the daily time frame charts. You can see this lower low forming, and you can see this higher low forming in the RSI. So this is a strong positive divergence, and a lot will depend on this stock, Reliance Industries, because if you just have a look at this particular daily time frame chart, it speaks a lot. Strong correction, pullback, correction, again a pullback, starts a new correction, looks very impressive, but suddenly starts going up. So some sort of support, some sort of probably buying is happening in this zone. It looks like that. And if you want to have a deeper dive into the Reliance stock, just have a look at the weekly time frame chart. If you have a look at the weekly time frame chart, it clearly shows that after this particular week of 16 December, more or less the candles which have been formed are more positive rather than negative. That is the reason why higher time frame charts are very important when you do in-depth analysis. You can see this candle, a decent big green candle. This is a really big candle which is in green in color. This is sort of a hammer, not very strong, but that is what it is. Again, this candle is not extremely bullish, but it has a lower wick. Only one candle which is big green candle, but nothing more than that. So a lot will depend on Reliance, because it is one of the biggest weighted stocks in Nifty, and probably one of the important stocks even in the energy pack. So how it behaves in the next few weeks will probably shape up the index chart of energy pack. Metal pack. Now metal pack, I would like to actually have a look straight away at the weekly time frame chart. It has corrected pretty nicely from the 9th of December to the recent lows of 13 Jan. Currently, we are consolidating near the 127.2% extension in the weekly time frame chart. We're just bouncing up, and we are coming down again up. So more or less we are a little bit in a consolidation zone, which is clearly evident in the daily time frame chart as well. Now, just by looking at the chart, it will not be easier to say that are we going to go higher from here or not, because so far it is just a pullback. But I have marked two levels over here for all of you. You can see this is the first level and this is the second level. So in case if we want to see a bigger pullback, a much larger pullback, then the first resistance band which needs to be surpassed is from 8652 to 8712. Once we start trading above it, close above it, sustain above it, then the gates for the next resistance band will certainly open up. Autopack. Now, Autopack again in the monthly time frame chart, a high wave candle. Good to see that after a correction and the level was tested was 21,805. We have been able to pull back and closed at 22,892, which is a pretty nice pullback, I should say. Looking at RSI also, RSI has not been able to trade below 30. 30 is over here and we are close to just below that 40 mark. Okay. So this is a consolidation range, and having a look at the daily time frame chart, we can see that the momentum has started going up. Okay. The momentum has started going up. So was over here. And we are more in a complex correction, like this is the first leg down, leg up, leg down, again a leg up. So now at this particular state in the market, at this particular time in the market, is it just a pullback or is it more than that? I think we'll have to wait out. Before that, jumping on to conclusions just by looking at the chart, saying that, oh, it's a very impressive pullback, it will not be a very, very wise decision, because in a structured correction, in a complex correction, these type of bounce backs are very, very common. So I think we should wait out for a few days and then find out what's going to happen. Finance pack. Finance pack, I should say that again, a pretty decent bullish engulfing pattern in the weekly time frame chart, which is trying to bounce from the 127.20% extension. And after that, if you have a look at the daily time frame chart, I should say that again, lack of momentum on the downside, sudden bounce back, good sign. But just to remind you that we are near a resistance band. You can see this is a very, very strong resistance band. Only if we surpass this, then we'll have this resistance band to tackle with, which is close to 23,605. Then the next one. So I think the ride on the upside, in case if the finance pack continues to move upside, the ride will not be easy. It will be pretty bumpy. So we have to be careful. And so far, it is just a pullback, nothing more than that. Now, this is the talk. This is the elephant in the room, I should say. Consumption pack. I think that is the reason why a lot of negative comments on the Indian economy was coming out in the media. And now looking at this particular chart is very, very visible that we have a big green candle in the weekly time frame chart, which is engulfing the previous week's candle, which is pretty good. Now having a look over here at the daily time frame chart, this is a very fast momentum driven rally on the upside. But just to remind you that in a complex correction, this is the first leg down, second leg up, little bit down, up, and then sudden correction, and then again we go up. So generally in complex correction, this is how it happens. Market never falls, straight away on the downside. So we should respect that, yes, we have been able to see a pretty impressive pullback, but will it result in a strong uptrend? Will it result in a much larger rally where people can go along and make money? I think for that, we'll have to wait out few days or maybe a couple of weeks. Price will tell on its own. But yes, we should surely appreciate that the price has moved on the upside and we have a resistance. Just keep a note of this particular zone, which is close to 11,690 to 11,730. This is a strong resistance. What happens if price closes above it will be very interesting. FMCG pack. Now, FMCG pack certainly looks very impressive. First thing is, in the last couple of weeks, I'm not inculcating the current week. If you just have a look at the last 2 weeks, we had a hammer. Then we have a pretty big green candle. And the impressive part over here is that we have been knocking the doors of resistance over here. Second resistance is at 59,776. So far, so good, I think. And the more important part is that when this correction happened, we never saw oscillator going below the 30 level, which was a sign, early on sign that something is cooking in the FMCG pack, and we saw this particular pullback happening. So far, so good. I think there are few chances that the FMCG pack could rally higher, but rather than just predicting, we should wait out few days and find out whether the price is really ready to go up or this is just a pullback in the complex correction. Infra pack. Now, infra pack, I should say it is just consolidating. You can see the RSI going sideways in the last at least 1 month. It is completely sideways, and whatever rally we have seen the last 3 to 4 trading session is just a mere pullback so far and nothing more than that. IT pack. Now, IT pack, I should say in the monthly time frame chart, it's not that bad. I should say that it is in an uptrend. In the weekly time frame chart, we can see that it is in the flattish trend and it is coming down, but the momentum, the speed with which, if you see this particular fall, is much faster and much bigger. And over here, we have bouts of buying, selling, again buying, again selling. So this is a sort of a low volatility time and price correction. This is not just a price correction. This is time and price correction. So you will see bouts of consolidation with correction in the IT pack. And the same is visible at a much larger level in the daily time frame chart. So I think IT will remain a little bit weaker than it used to be in the last few trading sessions. I think the talk of the town will be Infosys. I think Infosys, once it starts sustaining below 1824 or 1800 levels, a little bit more weakness will be visible in this particular stock. Pharma pack. Now, Pharma pack was one of the stock which was visible for a very, very strong rally somewhere over here. And even when early on, when the Nifty started falling in the last quarter of 2024, Pharma was trying to support the market. You can see this rally from late November or mid-November 2024 till possibly the ending of 2024. So we had a pretty nice pullback in the 1.5 month or 2 months rally in the ending part of the 2024, but now we are correcting. Looking at the daily time frame chart, obviously, we can see one thing very, very clearly. This is the high, first high, low, high, and low. I think if you just mark these highs and lows 1, 2, 3, and 4, it is visible that structurally the pharma pack is now looking weaker and we are in a downtrend with the principle of Dow theory. So I think any bounce back in the pharma pack will not be bought into, and bulls should stay away from this particular sector. If you are a derivatives trader and if you want to sell any rally, if you want to go short in futures or trade in options, you'll have to pick your stock very, very precisely. You can just not jump onto any stock and start trading in that stock. So just be careful about that. PSE sector. Now, in PSE sector, if you have a look, the first of all thing which is evident is a very, very fast momentum correction in the monthly time frame chart. In the weekly time frame chart, we can see a sudden fall in the momentum, and the result of that is you can see a big pullback in the month of mid-Jan, I should say, then a sell-off, then a high wave candle. So if we connect this particular part of the chart with the daily time frame chart, what we can see is we do have some sort of signs that the PSE sector is not having a very good momentum on the downside, and it does need some sort of bounce back. So I think if you want to mark important resistance, this is the first one, and this is the main level 9600, and the next resistance is close to 9800. As of now, if it does give a pullback, just remember that it will just be a pullback. It will not be an uptrend, because the reason is any sector which rallies a lot in a particular bull run, it needs to come down significantly, or if not come down significantly, it needs to at least go for a time correction for a very good amount of time before the next rally starts. And if you see this rally from 1950 to possibly 11,850, this sort of correction is not enough. Maybe we need a little bit more price correction, or maybe a little bit more time correction. So I think time will tell on its own, but levels you need to remember which are very, very important, which I shared 9600, and above that the next resistance is close to 9870 or 9900. Realty Pack, flattish trend in the monthly time frame chart. In the weekly time frame chart, again, you can see that it is clearly in a complex correction trend, and you can see a gap over here in the weekly time frame chart, which the price will try to fill with this bullish momentum which has occurred in the last week. Going ahead in the daily time frame chart, things are much more clearly visible. We had a lower low, we had a positive divergence over here, and the prices are trying to pull back, trying to close this gap. After we close the gap, what's next? That is an important question. I feel the next resistance post this particular gap will be somewhere at 989 to 1020 levels. All right. So far, it is just a pullback. Are we trying to start a new rally or something? We should wait very, very patiently, because in a complex correction, friends, don't forget that we will have such pullbacks, and suddenly when you start thinking, okay, this is a great breakout, you'll be presented with a pretty steep fall. So don't fall into the false hope that this is a new uptrend or something. As of now, it is not. But whenever signs are visible, I'll try to share with all of you. Midcaps. Now, midcaps, again, let's have a look first at the weekly time frame chart. Impressive looking chart. We have a big hammer. In the last 2 weeks also, we have candles where wicks are much bigger. So yes, there is some sort of buying which is evident, but the first sign of a pretty big bottom will happen when we start trading above 60,000 levels or something like that, which will mark a new high. But yes, as of now, you can enjoy the ongoing pullback as we have a lower low in the price. RSI has presented us with a higher low. So probably this pullback could continue a little bit more, and intraday traders or extreme short-term momentum traders who trade for 1 or 2 days, maybe they can enjoy, but as of now, nothing more than that. So I think summing it up all, it is more of a market where you need to be very, very vigilant, where sectors like consumption, FMCG are probably showing signs that something good may happen in the coming days. But at the same point of time, sectors like IT and pharma, which were the leaders of the last few months, are now probably, getting tired, and they're trying to come down. So you'll have to be very, very vigilant in the next 1 or 2 weeks, and price will probably give us a signal that which are the sectors which will probably hold on, and which are the sectors which will probably try to go for a toss and correct on the downside. All right. So wait patiently. Don't be extremely excited by this pullback or the good news which came yesterday in the budget. Let's wait out as traders, and let's wait out for better opportunities. Trade less, trade wisely. Thank you.